Imagine signing a 30-year mortgage, thinking you're securing your future, only to realize you've been trapped in a financial nightmare. Banks, corporations, and even artificial intelligence are working against you, inflating home prices and keeping you in debt for decades. But is home ownership really the dream we've been told it is? In this video, we're exposing the hidden truths of mortgages, the shocking ways banks manipulate homeowners, and how you can fight back. The illusion of home ownership. We've been raised to believe that renting is throwing money away and buying a home is the key to financial success. But have you ever stopped to ask, who actually benefits from this belief? Not you. The biggest winners are banks, real estate corporations, and Wall Street. Mortgages aren't just simple loans. They are financial traps designed to keep you paying for as long as possible. Here's how it works. Number 1. Interest overload. A 30-year mortgage isn't just a home loan. It's a profit machine for banks. Over time, you could pay 2 to 3 times the original price of your home in interest alone. That means a $400,000 house could cost over $1 million by the time you're done paying. Number 2. Bank first payment structure. Did you know that in the first 10 to 15 years of a mortgage, most of your payments go toward interest, not your actual home? This means banks get their money first while you barely build equity. By the time you truly own a part of your home, decades may have passed. Number 3. The refinancing trap. Banks encourage refinancing, resetting your loan and extending your payment period, keeping you in debt longer, and it gets worse. AI-driven real estate pricing is manipulating home values, pushing prices beyond what most people can afford, while big investment firms snatch up properties for profit. This isn't a free market. It's a rigged system. The hidden costs no one talks about. Most people believe that once they buy a home, the only thing they'll have to worry about is the mortgage. But the reality? There are hidden costs that can drain your finances faster than you ever expected. Number 1. Property taxes. Owning a home doesn't mean you're free from payments. Property taxes never go away, even after your mortgage is paid off. Worse, they keep rising due to inflation and government budget changes. If you can't keep up, you risk losing your home. Many homeowners underestimate this lifelong expense, leading to financial strain. Number 2. HOA fees and restrictions. Homeowners associations, HOAs, come with strict rules and hefty fees. They can fine you for minor violations like unapproved landscaping or parking in the wrong spot. Worse, if you don't pay their fees, they can place a lien on your home or even force a foreclosure, meaning you could lose your property over unpaid dues. Number 3. Maintenance and repairs. Owning a home means unexpected expenses. Major repairs like fixing a cracked foundation, replacing a roof, or repairing plumbing can cost thousands. Unlike renting, where the landlord handles repairs, homeowners must pay out of pocket. If you don't have emergency savings, these sudden costs can push you deep into debt or force you into costly loans. Number 4. Insurance and interest rate tricks. Homeowners insurance is a must, but rates keep increasing due to natural disasters and inflation. Adjustable rate mortgages, ARMs, seem affordable at first, but after a few years, interest rates spike, making monthly payments unaffordable. Many homeowners fall into financial trouble because they don't realize how quickly these costs can rise. These are costs that banks never warn you about when you're signing that mortgage contract. How mortgages can be a trap. Let's break down the biggest mortgage tricks banks use to keep you in debt. Number 1. The interest-first scam. Most people think their mortgage payments go toward owning their home, but banks have a different plan. In the early years, nearly all payments cover interest, not the loan itself. This front-loaded system ensures banks get their money first, while you build little to no equity. The longer you take to pay, the more profit they make. Number 2. The refinancing cycle. Refinancing sounds like a smart way to lower payments, but it's often a trap. Every time you refinance, your mortgage resets, meaning you start paying mostly interest again. Banks push refinancing because it extends your debt and increases their profits. Instead of helping you save, refinancing often keeps you locked in the system for decades. Number 3. Corporate takeover of housing. Large corporations and hedge funds like BlackRock are buying thousands of homes, making it harder for regular people to afford one. By controlling supply and demand, they push prices higher and turn homeownership into a privilege for the wealthy. Meanwhile, renters are left paying sky-high costs with little hope of ever owning a home. The 2025 housing market crisis. If you're planning to buy a home in 2025, you need to rethink your strategy. Mortgage rates have hit record highs, making monthly payments unaffordable for many. AI-driven pricing is inflating home values, pushing them further out of reach. Meanwhile, large corporations are buying up properties, limiting inventory, and driving up competition. The system seems rigged against the average buyer, making homeownership feel impossible. But that doesn't mean you're powerless. By staying informed, exploring alternative financing options, and timing your purchase wisely, you can still find opportunities. The key is understanding the market and making strategic decisions. How to beat the system and make smarter choices. If you still want to buy a home, you need a strategy. Here's how to avoid falling into the mortgage trap. Number 1. Consider house hacking. Buying a multi-unit property and renting out part of it can help you cover your mortgage. The rental income reduces your monthly payments, making home ownership more affordable. This strategy also helps build equity faster while minimizing financial strain. House hacking can turn your home into an investment, setting you up for long-term wealth. Number 2. Buy when the market dips. Housing prices go through cycles, and buying during a downturn can save you thousands. Rushing into a purchase during a high market could leave you overpaying. Watch interest rates, economic trends, and market conditions before buying. Smart timing can lower your mortgage and increase your long-term equity. Patience often leads to a better financial deal. Number 3. Explore alternative financing. Traditional mortgages aren't the only option. Seller financing, lease-to-own agreements, and private lenders may offer better interest rates or lower down payments. These alternatives can help buyers who don't qualify for bank loans or want more flexible terms. Always compare options and negotiate terms that work best for your financial situation. Number 4. Invest instead of buying. Owning a home isn't the only path to financial success. Stocks, index funds, and real estate investment trusts, REITs, can offer strong returns without the burden of a mortgage. Investing can provide liquidity, flexibility, and potentially higher profits over time. Before committing to homeownership, explore other ways to grow your wealth. Number 5. Pay off your mortgage smarter. Make bi-weekly payments instead of monthly to shorten your loan term. Apply extra money to the principal to reduce interest costs. Avoid refinancing unless it lowers your rate without extending your loan. The faster you pay off your mortgage, the less interest you'll pay, saving you thousands over time. The banks want you to believe you need a mortgage to build wealth. But the truth: financial freedom comes from knowledge and smart decisions, not blindly following the system. The housing market in 2025 isn't what it used to be. It's been hijacked by banks, AI-driven pricing, and massive investment firms, making it harder than ever for the average person to get ahead. But now, you know the truth. You know how the system works, and you know how to fight back. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell for more eye-opening insights on money, finance, and smart investing. Thanks for watching. Stay informed, stay empowered, and take control of your financial future.